Hi, it's Nash from Alpha Phi. Please smash that like button, hit the subscribe so you don't miss anything that I post in the future. Today I'm going to have a little fun, and I'm not sure who has heard of this, but OpenAI has developed what's called Chat GPT. So if you've heard of the AI buzz recently, there's actually a website you can go to developed by OpenAI where you can go ask it questions just like Google or Bing. And what happens is, instead of just giving you a bunch of links to go to and you have to kind of dig for your answer, it actually has a conversation with you. And so I'm going to have a little fun with it and ask it kind of, in my mind, a trick question. Is whole life insurance a good investment? And the reason I say it's a trick question is I don't personally feel like it's an investment, and it's not treated as an investment, but it is an asset, and it's in terms of a high cash value design, in my opinion, a safe, liquid, tax-free area to position money. So let me show you Chat GPT, and then let's see unfiltered responses, kind of what it said, and go from there. Alright, so this is Chat GPT. Literally you go to, I just go to Chat GPT, it's called OpenAI. I kind of have it saved now, but basically you can type in here, you know, whatever you want. So there's some funny or interesting examples, you know, explain quantum computing in simple terms. You know, I've heard of people asking it to code, and it, you know, does a full set of code very quickly and that sort of thing. But I come in here and you can kind of ask it different questions, and it's pretty fun. So I actually already asked it the question, but let me just show you what happens. So, is whole life insurance a good investment? And basically what it does is it gives you, you know, it types you out like a conversation. So gives you an interesting response, and it doesn't guarantee that it's right, but it is kind of a really interesting response. So I don't think this is actually what it said to me earlier, and then you can kind of have a conversation with it. So what about for legacy planning? And it remembers, hey, we're talking about whole life insurance. So it'll keep going, and it can be quite interesting. But since we don't have to sit through that, I asked, is whole life insurance a good investment? And here's was its response. Whole life insurance is a type of life insurance policy that provides coverage for the policy's holder's entire life and has a savings component known as cash value. We talk about that all the time, and that grows over time. While whole life insurance can provide some benefits, such as guaranteed death benefit and potential tax advantages, is typically not considered a good investment option for several reasons. First, the fees and commissions associated with whole life insurance policies can be quite high, which can significantly reduce the potential returns. Second, the cash value growth rate of a whole life policy is relatively low compared to other investment options such as stocks or mutual funds. Lastly, it is important to consider that the primary purpose of life insurance is to provide financial protection for your loved ones in the event of your untimely death, rather than as an investment vehicle. Therefore, it may be more beneficial to separate your insurance and your investment needs and invest in other options that can offer higher returns. Overall, whole life insurance may be suitable for some individuals. It is important to carefully consider and evaluate options and consult a financial advisor to determine if it aligns with your investment goals and overall financial plan. So I actually really like this response. I don't necessarily agree with everything, but the funny thing is, let's come through here. So whole life insurance can provide some benefits such as guaranteed death benefit, potential tax advantages, and it's typically not considered a good investment for several reasons. So I agree, it's really not an investment, but it does provide some great values. First, the fees and commissions are very high with whole life insurance policies. That is true with typical designs. That's the reason why we minimize the base premium and maximize the PUAs, is because whole life commissions are really sensitive to base premium dollars. So in other words, 10% of your money going to base premium versus 100% going to base premium, the 100% is going to be 10 times the commission amount that as compared to the 10% option. There is a small commission on PUAs, but it's literally multiple times over. Let me just do some quick math. So it's literally about 25 times higher on base premium than it is PUAs. So that's the reason we first minimize the base premium, maximize the PUAs, is that it's really a high commission payout on those base premium dollars, and they're also charging you quite a lot for the death benefit. So for multiple reasons, we're minimizing that to reduce the fees. So that's number one. Second, and this reduces the client returns. That is absolutely the case, and that's why we minimize that. Second, the cash value growth rate of whole life policies is relatively low compared to other investment options such as stocks or mutual funds. That is also true, right? We're talking about 3 to 6% net IRR, but it is in a tax-free manner where you can access it tax-free, and the death benefit is paid out income tax-free. So there's tax implications as well. The other thing is that it's very boring and safe. So when we talk about 3 to 6% net IRR year over year, that's what we mean. Over and over and over again, these companies are very consistent, very dependable, where the stock market is going to fluctuate. So you may be up 30% one year, but it may be down 30% another year. And so the average, you have to take into account what's actually going on over time. It is not an investment comparison. That is not fair. But it is a place to position money that I think is a great way to access it and reinvest into real estate or other safe assets. I'm not a huge fan of the stock market due to the volatility and those fluctuations. Lastly, it is important to consider that it is for financial protection for your loved ones. That is definitely true, and although we try to minimize the death benefit with how we design policies as much as possible, there's certainly a big death benefit component, and a legacy planning component that comes into this. And overall, it may be suitable. It just depends on your goals. And that's absolutely the conversation we want to have with people, is what are your goals, and does this support you meeting your goals? And certainly it's looking at the whole picture, not just the whole life policy portion or a high cash value or infinite banking policy, but what else is going on? What else are you doing to make sure you're setting yourself up and your family office for success? All right, we asked it another question. What are the pros and cons? So the pros. Guaranteed death benefit, unlike term life insurance. Whole life insurance provides a guaranteed death benefit that will be paid out to your beneficiaries upon your death, regardless of when that occurs. Second, tax advantages. Whole life policies can offer some tax advantages, such as tax-deferred growth of the cash value and potential tax-free withdrawals or loans. That is absolutely true, and that's how we design these policies, so you never have to pay tax ideally. Savings component. The whole life insurance policies have a savings component that can accumulate cash value over time. Love this part of it. Which can be borrowed against or used to pay premiums. That is true. So you can borrow, redeploy it into really whatever you want. It could be a Ferrari, not recommended, or another asset that can grow your assets and your money and your wealth in two places at once, or used to pay premiums. So this is also true. You can use it if you don't have a great year financially. You can use that cash value to actually cover your premiums, and you can make that back over time. Or we can adjust the policy if you don't want to pay anymore. There's a lot of options that you can do to make sure the policy stays in force and you get those benefits that you've already paid for. Estate planning. Whole life insurance can be useful in estate planning by providing a source of liquidity to pay estate taxes or other obligations. So what this means is the death benefit can help if you're over the estate tax threshold or there's state taxes that you have to cover. That can be a very good alternative to not impact the estate, and your whole life policy covers those estate taxes and juices up the trust or the family office for the next generation. Then jumping back here, because we skipped over it, guarantees. So definitely term insurance has very low payout ratios, meaning this is essentially true insurance. Let's cover me from age 20 to age 60 or age 20 to age 40. If I die, I want my family to be covered. Outside of those terms, right, that 10, 20, 30-year term, there is no death benefit coverage. So it's not guaranteed for your whole life, or whole life, as indicative of the name, is guaranteed for your whole life. Now let's look at the cons. So I kind of separated it here just to keep the pros on the same page. High fees and commissions. The whole life policies have high fees and commissions, which can eat into potential returns that accumulates cash value. So we already talked about that, a little bit redundant, but we minimize that as much as possible. Very much tied to the base premium and how we set that. So we minimize that literally to the insurance limits and the IRS limits. And so we minimize that to increase the returns for clients, because that is going to provide them a much, much better product over the long run. Well, short term and long run, I should say. Low returns. The cash value growth rate of a whole life insurance policy is relatively low compared to other options. Totally agree. That's why we maximize the liquidity. You can access it and invest it into real estate or other more safer things. I wouldn't recommend that in the stock market because you have the potential to lose it. You don't want that. You want to protect your principal in all cases. However, real estate or something like that can offer much higher potential returns while your policy is growing as if you hadn't touched it in the first place. Limited flexibility. Whole life policies are often inflexible, meaning that you may not be able to adjust your coverage or your premiums as your needs change. That is true with, again, traditional whole life, where you're putting 100% of your money into base premium. That is a bill. You will be charged that bill every single year or until you decide to make some policy changes where you don't have to pay that. With 10% of your money going to base premium, 90% going to PUAs, which is how we design it, and with a good company with high flexibility, 10% is your bill and 90% is flexible, and you can pay at your leisure. It becomes much less of a financial burden and maximizes flexibility. And not a primary investment vehicle. While whole life policies can provide some investment benefits, they are primarily designed to provide financial protection for your loved ones in the event of your death, rather than as a primary investment vehicle. Totally agree. This is not an investment. This is an asset to add to a larger picture, larger financial picture that you have for you and your family. And it is important to note that the pros and cons of whole life insurance may vary depending on the specific policy and your individual financial situation. Therefore, it is important to carefully evaluate your options and consult a financial professional. So, really important to work with somebody that you trust, will provide and work with you on your goals and provide multiple options. When I was first searching for policies, I just got one option. Here you go. This is the best option for you. Well, I think that's kind of not necessarily putting the client's best interest forth. You want to talk about goals. You want to talk about multiple options. Even if you say this is exactly what I want, I still think it's really good to look at multiple options just so you know what's out there. The worst thing that can happen is buyer's remorse, finding out something that you didn't know about down the line. And that's what I truly care about, making sure clients' needs are met and people are learning and understanding what they're getting into, because as we can see here, there's a lot of components going on with whole life, and it's good to be aware of all the options, the upsides, the downsides, the pros and the cons. So I hope this was helpful. A little bit of fun asking Chat GPT what they think of whole life insurance. So leave a comment, drop a like, and I'll talk to you soon. Thank you. If you enjoyed this video, please like and subscribe. Also, you can learn more at alphacrusaders.com at the link at the end of this video.